Hey guys, welcome back. Drip and Farm for Poverty. I'm your host, Drip Coach, dropping knowledge bombs on all drip ecosystem related projects. And in today's video, we are going to be covering why DCAing or buying the dip might just be gambling. And that means most people out there are not even familiar with the difference between true DCAing and what technically is gambling. And that all comes down to this keyword we have here, risk capital. So remember the adage that everybody's always saying, never risk more than you can afford to lose. Now, by definition, according to Investopedia, risk capital refers to funds allocated to speculative activity and used for high risk, high reward investments. That would definitely be DeFi. Any money or assets that are exposed to a possible loss in value is considered risk capital, but the term is often reserved for funds earmarked for highly speculative investments. So here's an important caveat. Remember, these definitions come before we ever really had blockchain technology and stuff like that. So right now, the entire DeFi space and even crypto as a whole, until more massive adoption comes, could be considered assets being exposed to possible loss in value, because we don't know how things are going to shape up. Now, I'm pretty confident that some form of the blockchain will always be here. Now, we've already seen some chains or tokens, I should say, go by the wayside already, but the chains in and of themselves, I'm guessing, will still always be here as well. But you can't be certain, because depending on what country regulations do and how it's designed, they could make things a lot harder to get in and out. And for example, we could take CZ and Binance. Now, we know we all support Binance, but as we see with what's happening with Binance.com in the US, they have this allegations and trying to basically a smear campaign for Binance. Now, that could result in more tougher regulation on Binance.com. Now, that means still Binance.us. That means Binance.com will still be here because there are way more countries globally that do support Binance, but it could very quickly start to become a problem in other countries as well. Now, again, I believe it's going to be here, so I'm not really worried about that. But the point I'm trying to get you to see is that we don't really know what the future holds for the crypto space. Now, we can assume, again, Bitcoin will be here because it's decentralized enough, but Binance is kind of in that gray area. It's centralized, but he supports decentralization and nobody really knows how many or who the people are that are running the nodes on Binance. So it's hard to say. And then every other chain pretty much is centralized as well. Even ETH is pretty much being controlled by a couple of centralized exchanges that are staking on behalf of individuals. So again, what could that mean? How does that shape up? We don't know. So the point I'm getting at is that pretty much anything you put into crypto at this stage outside of Bitcoin would be highly speculative, because we don't know how it'll shape up. As more adoption comes and more countries start to put it on their balance sheets and things of that nature, then of course we can say it's moving out of that highly speculative investment category. But let's just assume that everything in there is speculative because we don't know how it'll shape up. So that being said, that means that risk capital is the funds that are expendable in exchange for the opportunity to generate outsized gains. Investors must be willing to lose all of their risk capital, which is why it should only account for 10% or less of a typical investor's portfolio equity. Now, let's again assume that this is all high risk, but for the sake of this argument, let's make the statement that we are indeed going to be getting unbanked and that everybody is moving over to holding your own assets and becoming your own bank. So that means you are your own savings account, you're your own checking account, all that stuff, right? So that means out of that, typically 10% is going to be allocated towards speculative, high risk, high reward investments. Now, let's say that's $1,000, or we'll use simple math. You make $100,000 a year, which I know is not what most people make at their current jobs, but simple math, $100,000 a year, 10%. That means in the course of a year, you're going to be able to allocate $10,000, right? Simple math. So if you decide to go Hail Mary into a DApp at the beginning of the year, or whatever for $5,000, you only have $5,000 of risk capital left. Now let's just again assume for simple math, you put all 10,000 in on drip at one time, which I did. Is in my case, $12,000 went in at one time, and that was at about 40 bucks. Now, if I do that all at once, and that's already more than the 10% I'm supposed to be allocating for risk capital, and then drip dips down to pennies on the dollar, and I then all of a sudden start DCA, I'm no longer using risk capital. I'm actually gambling, because remember, it's supposed to be a percentage. You're supposed to sit out, remove the emotions, make some charts, do some analysis, determine what your total risk capital is, and then from that you decide how to enter. And most of us just Hail Mary in all at once, or as Stunner Breezy would say, we bring the sledgehammer. So that means pretty much we're putting everything we want to spend at one time or over the course of maybe a few weeks. Very few of us, I think, have the patience in the DeFi space due to the FOMO and the high volatility to just spread that out weeks and weeks and weeks and weeks. Now, of course, you can DCA into like Bitcoin and ETH using automatic buying strategies, but most of us in these DeFi dApps, for example, Drip, we probably put in most of our capital that we wanted to put in at one time. So that means anything else that you're pulling out of the couch cushions and things like that, doesn't matter where it came from, it's no longer risk capital because it wasn't originally allocated. What you're actually doing is you're like, oh my God, it's on sale. I think it's going to go up. I'm going to put some more money in. But if you didn't allocate that originally, then you're just gambling, and it's nothing wrong with that. Just be honest with yourself. You're not investing though. Investing means you're making sound decisions. You're removing emotion. You don't react to the chart and just buy on speculative things happening in the ecosystem. And again, there's nothing wrong with that. That is definitely what the space is designed to do. All I'm saying is be aware of what you're doing so that you can call a spade in that regard. Understand what risk capital actually is, meaning you have set aside funds for high risk, high reward investments. And once you have used that up in a month, a year, a week, a day, whatever, you're gambling after that. No matter how many times you buy the dip, you are now gambling because you have used up your risk capital. Now, on the flip side, let's say you have a budget each month that you allocate towards, personal endeavors, personal enjoyment activities, going to the movies, going out drinks with friends, whatever. And maybe that's $50 a week. So that means you have $200 a month that you spend on personal endeavors. Now, in that regard, that $200, you could then, of course, go in, and that could be part of your risk capital literally every month because it's part of your current budget. But again, if you use that up, and or let's say you take that 200 and then you still go out with drinks with friends and do all the other stuff, you have gambled again. But again, call a spade a spade. Be honest with yourself and realize what you're doing and that you are just gambling. You're not making sound investment decisions. And again, there's nothing wrong with that. So I'm not trying to throw shame. I just want people to understand how to remove the emotions and look at the actual data, and then start trying to let data drive your decisions if, and that's a big if, you want to be in that top 1 or 5 or 10% of earners and not just get lucky. Because I showed you before on the channel how gamblers get lucky in the lottery and most of them go broke because they have not changed their mindset. They're still gamblers. So they make all that money and then they're like, well, I can make it again because, hey, I called the top on this, or I got in early on that, so I'm going to throw more at this. And over time, if you've ever gambled or been in a casino, the house will win. The only people that walk away from the gambling casino with money are those that went in with risk capital. They bet big when the idea or the opportunity came around, and they walked away. They knew how to take their money and leave, or how to, as the song says, know when to fold them and know when to walk away if they were down, and then they come back another day and try again with other risk capital, again, like if you had a budget. So just wanted to highlight that because I know that's not really spoke about in the DeFi space. And again, I understand the need for DeFi degens. And again, I used to be one of them, but that's why now I'm betting on myself I'm not gambling anymore, and I just want to build something that is an actual business model that can scale and I can solve problems with it. But I do understand the need for the DeFi degens, and I do understand the allure of the gambling in the space. I lived in Vegas for 4 years. I used to hang out at those casinos and stuff like that. Well aware of it, and it's definitely an opportunity. But just again, realize what it is. That's all I got to say. All right. Hope that provides some value. And if it did, you know the drill. Smash that HBO special brother out. Like, subscribe, comment down below. And until next time, lift daily and achieve your impossible. See ya. Want to pay your in real life bills with crypto? How about send crypto directly to anyone with a bank account? Spritz Finance is a decentralized solution to be your own bank and connect your crypto earnings to real world bills and payments. They do not take custody of your assets and allow support on multiple blockchains and Web3 wallets. Sign up below using my referral link and you will get $50 back when you make your first $50 bill payment with crypto. Additionally, I will be using referral bonuses to airdrop, donate, or burn based on community feedback. Sign up now.